Welcome back to Explain the Charts. Today is February 10th, 2025, and we're doing a deep dive into the SPY, the S&P 500 ETF, analyzing both the current news and the chart data to make sense of the recent market movements. Recent news headlines point to increased market volatility due to Trump's new tariffs on steel and aluminum. This has created uncertainty among investors, resulting in fluctuations in the stock market. Steelmakers, however, have seen a boost due to the tariffs. Let's start by examining the overall trend on the daily chart. We see a mix of bullish and bearish candles, indicating indecision in the market. The price action seems to be consolidating, creating a potential base for future price movement. The recent price action shows a potential support level around 490 to 495 and a resistance level near 505 to 510. A decisive break above 510 could signal a bullish trend reversal, while a move below 490 may lead to a sustained decline. Now, let's switch to the 1-hour chart to get a closer look at the recent price action. We'll focus on the last few days to see the impact of the recent news. Here, we observe more granular details of the price fluctuations, which confirm the market's volatility. Notice the short-term fluctuations that are consistent with investor uncertainty. The 1-hour chart appears to be consolidating, forming patterns that could potentially indicate either a bullish or bearish breakout soon. We need to look for confirmation from other indicators or price action. Finally, let's look at the 15-minute chart. The 15-minute chart provides an even more granular view of the price movements and helps us identify short-term trading opportunities. Here, we can see the rapid fluctuations in price, highlighting the market's sensitivity to news and events. The high-frequency trading in this time frame contributes to its increased volatility. The 15-minute chart exhibits relatively short-term trends. This allows us to identify quick reversal patterns, but makes it more difficult to predict long-term outcomes. Looking back at the daily chart again, we can see the bigger picture and how these short-term fluctuations are affecting the overall trend. The 490 to 495 support remains crucial. If broken, further downside is likely. The 505 to 510 resistance level remains a significant hurdle. If the SPY can sustain a move above 510 and hold it, it would signal stronger bullish momentum. On the 1-hour timeframe, short-term trading opportunities arise around 600 to 605. A clear break above 605 could give short-term bullish signals, while a fall below 600 might trigger bearish trades. Short-term predictions are challenging due to the high volatility. On the 15-minute chart, we must observe shorter-term reversal patterns to capitalize on brief market movements. However, these strategies will require quick execution and a tighter stop-loss. In summary, the current market situation for SPY is quite volatile. The support at 490 and resistance at 505 are key levels to watch. The most likely scenario is consolidation unless any major global or domestic changes affect the market. If the resistance at 510 breaks, a bullish trend could resume, whereas the breaking of the 490 support suggests a decline. It's important to pay close attention to news headlines for the near-term future and also monitor volume changes, as higher volume during breakouts usually confirms significant momentum shifts.